Welcome to the first of the 75.3 weekly investment updates. My name is Chris Marshall. I am Head of Investment Strategy at Dragon Investment Managers and on the investment committee for 75.3. Over the past few weeks we have of course seen unprecedented policy moves and financial market moves, and therefore we thought it was prudent and worthwhile to put together weekly talks outlining what we see going on in the real economy, in the financial markets, as well as perhaps some details around how we see some of the investments we hold performing and moving, and giving a little bit more insight to our clients. Over the past few weeks, of course, we have seen the outbreak of coronavirus throughout the world, with daily cases still accelerating at this point in time. Of course, this started in China, in the city of Wuhan, and we first started getting data from that around the beginning of this year. As the real economy really shuts down and goes into a significant downturn, we have of course seen financial markets give extreme volatility, with some markets selling off around 35% from their peak. For us, the way that we have always run the investments at 75.3 has been to segregate these into three main camps. These being more traditional style investments, which would include both smooth funds and with profit style funds. We then move on to the second camp, which is risk-rated multi-asset portfolios, where we outsource the investment to a number of leading fund houses, and then also discretionary fund management and more bespoke services such as that which I run at Dragon Investment Managers, as well as other regional and national DFMs. Looking at how these strategies have been working in the current market, it's very pleasing to see that the suppression of volatility has been working across them. We separate these out into risk-rated bands, with the more traditional style with profits and smooth funds operating at the lower end of the risk-rated spectrum. With these, of course, investors, certainly within a lot of the with-profit funds, benefit from guaranteed values as well as reversionary bonuses, which once applied cannot be removed. This is the case in many of the with-profit funds that we advise on, or the advisors advise clients on. While these, of course, can't be removed, if clients who look to try and withdraw funds during unprecedented financial market moves can sometimes be subject to what we would call market value reductions or market value adjustments. These really trying to make sure that clients who are pulling money out are not disadvantaging other clients staying in, and the fund manager's ability to liquidate investments at distressed prices. The good news for any long-term investor looking to stay in is our hope, of course, is that we will see financial markets snap back once virus concerns have been addressed, and at which point we would fully expect for such market value adjustments and market value reductions to be removed at such time. Moving on to the strategy, which is risk-rated multi-asset portfolios. We operate these for risk ratings between 3 and 7, and these really try to suppress volatility in extreme market moves such as we have seen over the past few weeks. As I mentioned, we've seen some equity markets sell off by around 35%. And the pleasing thing that we have seen here is this mass diversification that we build into these, both through the varying philosophy and approach of the fund houses we outsource this to, as well as the asset diversification that each of those fund managers is deploying, has helped reduce volatility massively. With some of the lower risk-rated, level 3 risk-rated portfolios, while still giving back the last 12 months' performance, are still in positive territory when we look over a longer term period. Once again, as we fully expect that markets will snap back from this over the coming months or years, then once again, long-term investors, I think one of the key things at this point is to make sure you are looking at a certain time horizon. Looking at very short periods of time, obviously we are seeing extreme volatility, but if we lengthen out the scope of the time period that we look to, then of course we see that while any drawdown is uncomfortable and not nice, these are still performing as we would hope and as we would expect given the market conditions around us, and still provide potential opportunity for them to come back in the future. At the more bespoke end, the discretionary fund manager side of things, each fund manager will be making certain tactical plays. For ourselves at Dragon, we still run a fairly defensive portfolio. We have started to dip back some of our cash holdings into the market as we have seen opportunities arise, but we do still remain fairly defensive, believing that we can see volatility remain in the market for a period of time. In further weekly updates, we will hopefully bring you some of the views from some of the fund managers who we outsource the investments to, and really kind of get their take on how they're positioning their portfolios, as well as their take on what they see the developments from fiscal, monetary and economic policies coming through. Hopefully these series of videos will give you some insight and also some reassurance that they are being monitored. We are keeping an eye on developments as they unfold, and we will keep you updated to any changes or any information that we believe is relevant.